A very good morning, good afternoon, or good evening, wherever in the world you happen to be, and welcome to today's webinar, which takes reefer container market outlook, trade disruption, demand shifts, and the role of technology as its theme. The webinar is brought to you in proud association with our premier partner, Orbcom. Now, ladies and gents, just before we get underway, I want to share with you key information that will support you in getting the most out of proceedings. First of all, please be assured we will direct you to the recording and the materials after the webinar. Please submit your questions at any time because we do Q&A throughout the webinar, and any questions that we don't get to, we commit to coming back to you in writing within a week of transmission, meaning there's every reason for you to get involved and send through your questions confident you're going to get answers. Please stay tuned into the end so you don't miss out. I guarantee our high-level panel will be sharing powerful, original, and exclusive insights of real benefit to you and your operations, so do stay tuned. At the end of the webinar, I will circulate a link to an exit survey. Please take a minute or two to complete it, and in turn, I'll direct you to the presentations and recording. For enhanced viewing, please use the latest version of Microsoft Edge or Google Chrome, and in the unlikely event you lose sound, simply refresh and it will return. A word or two, ladies and gents, about your hosts, Riviera. Riviera Maritime Media is a maritime and offshore information specialist active in 4 areas: news, events, jobs, and data. To learn more, please visit the dedicated website www.rivieram.com. Well, ladies and gents, this is me, Edwin, and I'll be moderating proceedings today. And speaking of today, this is the ground we're going to be covering. Key developments in container shipping in 2025. Forecasts for reefer commodity and trade lane volumes. The outlook for reefer container demand and production. Operational and customer relationship impacts for shipping lines. Strategies for improving operations with limited resources, and solutions for supply chain visibility, cargo protection, efficiency, cost reduction, energy savings, and sustainability. This is our agenda, or in other words, how it's going to go. Presentations will be run consecutively and followed by open discussion. Please do submit your questions at any time because, as you know, we do Q&A throughout the webinar. At the end of the webinar, we'll share key takeaways and conclusions, and we'll also preview what's next. Or what's next for us is to meet our high-level panel. I'm delighted Frank is here, Dr. Frank Pastor. He is Director, Head of Ports and Specialized Shipping Research with Drury Shipping Consultants. Alongside Dr. Frank is Philip Gray. He is a Senior Associate, Reefer Shipping with Drury Shipping Consultants. And completing the set, Lars is here, Lars Jensen. Lars, of course, is a Director, Product Management Smart Reefers with Orbcom. Over the course of the webinar, we will certainly find time for a poll or two. And as you know, ladies and gentlemen, we really value your questions. So please fire them in at will via the webinar chat. Ladies and gents, thank you very much indeed for joining us today and in such numbers and from all over the world. It is high time we got underway. So with that said, Philip, at the point you see your presentation on the screen, the floor is yours.
Good morning. Good morning, everybody. Thanks, Edwin. Thanks for the intros. So indeed, it'll be Ferenc and myself going through a few of the items today. And Ferenc is Head of Ports and Specialized Reefer, Specialized Shipping at Drury, and I'm the Senior Associate for Reefer business within Drury. All what we'll be talking about today is in fact available in our annual Reefer shipping report. It covers commodities, modal shares, reefer container shipping, specialized reefers, freight rates, indices, plenty more. So everything is there and available and at our website to be further purchased as required. Now, let's dive in. I think one of the important things has, in fact, more to do with the global shipping and container business than with the reefer, but the impact. This important slide is showing the throughput, the container throughput that we've had year on year based on March 2025. And we can see that in the course of a year, that throughput has gone up 6.6%. This is massive. We're talking about laden containers, empty containers, transshipment containers, any movement. And this has a lot to explain what has been going on and the sufferings, in fact, that many reefer shippers, BCOs, have been sustaining over the last 12 months or more. It is expected this year the growth of throughput will be a bit less, maybe 2.5%. A lot of it has, of course, to do with Suez Canal, more feedering, more rerouting, growth of India, and a long list of little items that add to this, and which is making our life pretty challenging. Let's not forget 5% of all container movements is reefer cargo. So the reefer cargo is floating and following the dry and is affected in any case by it. More on this later on. Now, the global seaborne volume in 2024 reached just under 141 million tons, an increase of about 2.5% year on year. In fact, global trade is estimated about 291 million tons. So this is, to put it in perspective, it's just about half. Now, in this chart, we show these gray and blue little bars. The gray bars is the seaborne aspect of shipping, reefer. And the first three is the bulk of the story: meat, bananas, and seafood. This is year-round cargo, which is the bread and butter of the reefer business. And the rest is, let's say, not unimportant, but obviously rides on seasonalities and so on. We can also see how the different percentages in respect of how it relates to the percentage in what is seaborne and what is carried by other modes. And a good example I always say is bananas. About 80% of it is seaborne, and the other side of the spectrum we have veggies, in which the majority is carried by truck overland near shore. So this gives us a little bit of a sort of picture of the different commodities and where they stand in their volume relative to the whole reefer story. Now, the trade lanes, which is very interesting right now with all what's going on, and we'll see that later on. Ferenc will show us a few little pictures. Today, the strongest reefer trade lane is in fact Central America and Caribbean, but let's say mainly Central American to the USA. And here we've seen growth over the last year. But I also want to show you the first one to the left, North America to Asia, which is very topical also, whereas it used to be the strongest reefer trade in the world, a lot of meat moving from North America to Asia. But we see a decline over the last couple of years, and there's been negative growth. So this is something which has an impact on what's going to happen with the reefer business. Again, Ferenc will later on focus a little bit on what's going on in that part of the world. Now, when it comes to forecasting, it's ever so difficult, as we know. Foodstuffs, of course, is everyday business, and we always see a growth. We expect a CAGR of some 2% towards 2029. But we have the usual caveats. bananas, there's always something weather-related, or right now, strike-related. Panama, with the fact that the exports have stopped, banana exports have stopped out of Panama, so that's creating some sort of disruptions. So there's always something with that. But of course, we have stable growth in meat. Brazil is coming strong here. And then we have what I call the seasonal business, citrus, deciduous, veggies, to a certain degree exotics. And these are the commodities that also make the market and make the spot market relevant and exciting in many cases. So 2% CAGR expected, 2.5% growth 2020 in 2024. And that sets the tone for Ferenc. I'll pass it to you so you can continue a little bit with the more topical aspects.
Thanks, Philip. As you said, volatility and uncertainty are a core part of these reefer trades, and of course forecasting them as well. And to show what I mean, I have picked two commodities from the 15 that we cover in our reefer market report. So let's start with meat. The gray bars in the forecast period, they represent historical average positive and average negative annual growth rates. This should give you an idea of how the of how different the real life outcome could be compared to our forecast. Please note that these annual uncertainties can add up year on year by the end of the forecast period. So obviously the actual story can be materially different if you look at these uncertainty bars. While using various regional and global GDP figures can explain the majority of the historical variance in the trade volumes. And we also use these to do our forecasts. There are unpredictable geopolitical and weather events that can significantly impact the yields of crops, which constitute the majority of reefer commodities. On the other hand, meat is a commodity for which production is highly intensive and also sheltered from most weather effects, as long as feed is available. If you see the pie chart on the right-hand side, it shows the breakdown of years with growth and the years with decrease year on year. So you can see that for this particular commodity, it's been a basically steady rise in the last 2.5 decades or so. Okay, moving into citrus. Citrus is a good example for the opposite of sheltered production, with strong weather effects or diseases such as citrus greening. Of course, the juice industry also has a significant impact on citrus moving around in reefer containers. When you look at the pie chart here, it tells you that the growth versus decrease is close to basically being a coin flip. But when you put it together with the range of the uncertainty bars in the forecast period, you can guess that overall there has been a positive growth in the last 2.5 decades, and that indeed has been the case. So while overall steady, slow growth, but really, really high volatility. We have a very tumultuous year, so we also need to talk about the new US import tariffs and their effects on global demand for reefer boxes. And to assess the potential impact, we have looked at how US imports compare with global trade volumes measured in 40-foot high cube containers. As you can see, banana from Central America and the Caribbean is the main commodity here, with lower levels of exotics, fish, fresh veg, and some other minor trades. Important to note that most of the countries where this produce comes from belong to the group with the lowest level of US import tariffs, the 10% category, and we do not expect a significant fall in their consumption levels. Let's take a look at exports too. They are, of course, relevant because retaliatory measures could be used by the partner countries. So, among them, various state directives and bans depending on the country, or just, again, higher tariffs from that side. The overall level of US seaborne reefer exports compared to the global seaborne reefer trade is quite small. As you can see, this is really a story of meat, of which 2/3 goes to Asia and about half of that to China. So even if this US-China trade completely vanishes, it should have a very small effect on global trade and hence demand for reefer boxes. And finally, our forecast for the box fleet with telematic devices installed. This is our annual update from last year. However, if you bear with us for one more month, this will be available in our upcoming shipping container annual report. With regard to reefer boxes, which we are now focusing on, you can see a steady increase that started significantly earlier than for standard dry containers. This also means that reefer boxes have now reached a ratio above 50% of them being outfitted with a telematic device by now. Thanks, everyone. I hope you found this short presentation useful. And of course, we are always happy to help with any market intel if we can. Do reach out to us. Edwin, back to you.
Thank you very much indeed. Well, Ferenc, I can tell you they're very interested because there are loads of questions waiting for your combined account. But more immediately, I'm delighted that we've got Lars waiting in the wings. Lars, at the point you see your presentation on the screen, the floor is yours.
Thank you, Edwin. Thank you, Philip. Thank you, Ferenc. My name is Lars Jensen from Orbcom. I'm here to talk about the reefer market outlook in terms of the role of the technology company and the impact it has on shipping lines and our customers. There you go. So we all know there's been a lot of trade disruptions. There's been a lot of unrest in the world. And the question is, how does that actually impact the shipping lines, our customers, and how does it also, what is the role of technology companies? There's no doubt that the trade disruptions and the tariff unrest and the port congestion means that the capability to have full end-to-end visibility becomes even more important. And that's where the telematic companies come in and can play a very important role. There's also some stronger regulatory measures that's being implemented for security reasons and for other reasons. And again, the capability to be able to track reefers through telematic devices become even more important. Then you have transport plan interruptions. You have wars breaking out. You have sometimes a canal that's closing down. So the transport plan optimization also becomes more important with this constant global threats. The capability to make quick data-driven decisions is also extremely important. So you can react with very short notice because, as we all know now, the world can change tomorrow based on some of the disruptions, some of the change in tariffs and the congestions, etc. And also very important is the importance of the asset management. When you have trade disruptions, you suddenly have a pile of containers ending up in one location where you didn't expect it. So you might have to change your positioning pattern, and you may have to change your requirements for equipment. So knowing where your asset is always extremely important. And again, this is where we can, as a telematic company, play a very important role. So how do we actually improve the operations with limited resources? One thing, of course, would be to increase the number of telematic devices, especially all-comms devices, but I call it scalability. The more devices that we get installed on reefer containers, the better we can actually use the data to work with the existing unrest in the world. You can also identify more realistic ways of using the data to improve operational efficiency, reduce costs, and generate ROI. And here I'd like to talk about that we in our industry, and that both for telematic companies and shipping companies, we tend to use some very high-level words like transparency, visibility. I use them myself. But I think it's time to do a little better work on that and find out exactly what does that actually mean, because what does it mean visibility? How do you actually reduce your cost? How do you improve your efficiency when you have increased visibility and transparency? So I think we as telematic companies will have to play a more active role and assist the shipping lines in how can they better use the data and get down to business and come up with realistic, tangible ways of actually using the data to reduce the cost, to reduce the cargo risk exposure, and also to create operational efficiency. We also have the risk of course, changes to the transportation patterns. So before, when smart reefers just were developed, we focused a lot on the land side, on the intermodal side. Today, we need to also have the vessel system included, so you have full end-to-end visibility. And there you go. I used the visibility word again, but I'll get back to the ROIs on the next slide here. So solutions for supply chain visibility. One of the key things of using our data is to use it for monitoring of our reefers. That protects the cargo condition. It reduces the risk of cargo damage. It also enables us to actually use telematic devices for live monitoring of performance of reefer containers and thereby reduce the cargo risk for cargo damage. We can also use data to actually reduce the number of off-power periods that happens at terminals. We can optimize the preparation of equipment by only performing the manual PTIs when it's absolutely necessary, and instead use the data to turn the equipment a lot faster, reduce electricity consumption, and also reduce CO2 and cost. We can also, based on the data, we can optimize the fleet composition. We have a lot of data telling us about how each type of OEM performs, what breaks down, what does not break down. And we can use that to use the right equipment, to use the best equipment, and also to work with a more lean fleet, because now we have better control of our assets. And then lastly, again, we need to identify realistic, tangible, and measurable ROIs to reduce the cost. One thing that I'm seeing is that the shipping lines are asking for us to document the exact savings. In some cases, that can be extremely difficult, but there are some obvious ones, like we talked about here on the live monitoring and on the reduction of off power and the PTI process. That, in my opinion, are the top three things that we can immediately do and to assist the shipping lines in cutting down on the cost. And that was it from my side. Back to you, Edwin.
Thank you very much indeed. Another great presentation which has stimulated a number of questions. Ladies and gentlemen, do keep those questions coming. What I'm going to do is give our panel the opportunity to catch their breath in anticipation of us dealing with the many and varied questions that they have inspired. And so I will come to you, audience, with the first in a series of poll questions. We're going to move at speed. A very simple one for your kind account, ladies and gentlemen. Kindly let us know how you see it. Have the new 2025 US import tariffs hit your business negatively? It's a binary question. Either they have or they haven't. Let us know how you see it. Just a few more seconds on the clock, please, ladies and gents. So nice and lively with the voting. I can tell you that both categories have attracted your votes, with one of the categories attracting slightly more than the other one. And in about 5 seconds, I will tell you which one that is. So, ladies and gentlemen, by a margin of approximately 5%, most of you are saying no, so relatively close. Let's do another one. You've seen the way it works. Here we go. We'll do another one along similar lines. Will all most actively trading seaborne reefer containers be outfitted with some telematic device by 2030? Either you believe it will or you don't. So let us know how you see it, ladies and gents. So just a few more seconds on the clock. Will all most actively trading seaborne reefer containers be outfitted with some telematic device by 2030? The majority of you are saying that they will indeed be outfitted as such by 2030. Just another couple to deal with in the present. Where do shipping lines think they can get the biggest ROI from telematics? Now, there are a number of areas flagged up there. I just want you to select what you think will be the area where they will get the biggest ROI. So you may regard all of them as offering ROI potential, but I'd like to hear from you in terms of which of those listed items offers the greatest ROI potential. I'm going to give you the top 3 in about 10 seconds time, just to give the last few to the opportunity to cast their votes. As I speak, the third most popular response is optimized PTI processes. The second most popular response is providing a commercial platform service to customers. And there's only about a percentage point between those two responses, but polling almost 4 times as many responses in the pole position is reducing fleet costs and optimization. It could be our panel choose to reflect on some of these findings a little later on. Last poll question for the time being. Let's all take part. How confident are you when it comes to the future of reefer container trade? Your options range from very positive to very negative. Let us know how you see it. So, ladies and gents, let's all take part. How confident are you when it comes to the future of the reefer container trade? Just a few more seconds, please, ladies and gentlemen, and then we will get to the many and varied questions that you have inspired. So, just a few more seconds, please. I'm allowing you the opportunity, those few stragglers, to cast your votes so that we have a truly representative sample. Just a few more seconds on the clock, please. Here we go. So as I look at the results, let me give you the breakdown of the top 3. They are as follows. In third place, average. Second place, very positive. It's quite dynamic voting. Second place, very positive, but most of you are positive on this question. Well, I'm positive we're going to get some very good answers to the very good questions you fired in. Let me bring the panel into full Technicolor view. Here they are. Welcome back, gentlemen. So without further ado, I'm going to give you 3 questions up front. Please allow me to read the 3 questions, gentlemen, and then we can take it from there. So number 1 of 3 is, does Drury have any figures for inter-Asia reefer trade, one of the fastest growing in year-on-year terms? Secondly, what are the main challenges faced by shipping lines in the reefer market, and how can they differentiate themselves from competitors? And third of 3, it's directed at Lars, but of course everyone can comment. Congratulations on the brilliant insights you shared. What do you think is the most underestimated factor that will shape smart reefer adoption in the next 2 years, but isn't getting enough attention today? Lars, seeing as you've been mentioned by name, why don't we start with you and then others can come in. Over to you, Lars.
Thank you. So the most underestimated factor that will shape smart reefer adoption in the next 2 years. Well, as we talked about, there is of course an increased need for the full visibility. Another factor, of course, is that communication costs are coming down, and that should allow more shipping lines to invest in telematic devices. Yeah, that's probably the 2 most important one. There's still a lot of things we can do on our telematic devices. I do believe that AI is going to play a very important factor going forward for smart reefers. Also, we can use that in many different ways to predict, do preventive maintenance, and predict when containers are going to fail. So that's also probably an underestimated factor that's going to impact the adoption for the next 2 years.
Fine. Let's bring in your colleagues. Ferenc, Philip, anything on that question or one of the other 2 that I've posed?
Yes. Yes, indeed. Yeah, we do have that data. I see who that came from, and we need to tabulate it, but that data is indeed available.
Okay.
In inter-Asia reefer trade, which is indeed interesting aspect. So differentiation, I think we have carriers that specialize in frozen, carriers that specialize in both. These days, basically the niche carriers, the ones that are focused, are the ones that can differentiate themselves from the mega carriers. Let's put it this way.
Okay. Ferenc, would you like to come in?
Nothing really to add to Philip's points. With regard to Inter-Asia, but also other, numbers we didn't show, and even if they are not in our report, we do collect all sorts of data, and we also have an advisory team who can help, with even very specific customized report. And I would encourage everyone interested to reach out directly to us or via Riviera. We're happy to come back to you.
Perfect. Some more questions for your account, gentlemen. Feel free to take notes as I give them to you. Perhaps we'll come to the panel at large. Can the entire panel provide their thoughts on the risks and rewards of data sharing throughout the reefer supply chain? That's the first one. Secondly, we've seen rising calls for resilient low-carbon cold chains and mounting geopolitical disruptions. Are we approaching a tipping point where shippers and cargo owners may bypass container lines altogether through new models of direct sourcing, regionalization, or alternative logistics networks? And are carriers truly ready for that potential shift? Philip, specifically, how do you reconcile the apparent contradiction between declining growth rates in traditional reefer trades and the projected expansion in specialized segments? And to some extent, you've dealt with this, but if there's anything further to say on the ability to get quantitative data on reefer traffic of fresh fruit destined to final consumption versus traffic of fresh fruit intended for processing, that's helpful too. So 4 very detailed questions. I know you've taken your notes, gentlemen. Why don't we come to Ferenc? What about this question around resilient low carbon cold chains? Over to you, Ferenc.
I think that's a tough one, right? Because long term, various stakeholders, all share that goal of decarbonizing and try to use as much alternative energy sources as possible. Now here with Reefer, right, we also have the issues of refrigerants, whether they are kind of climate compliant or not. So quite a few things to look at. But at least for now, and I think also for the future, the primary point when we think about the cold chains here is really the fact that we have very sensitive cargoes. So we need to have very resilient setups in which any kind of spoiling is not an option, and at the same time trying to make the whole supply chain greener and greener year on year. But it's gonna be it's a tough one because of the cargoes carried and because of the complexity of the assets involved.
Okay, let us come to perhaps Lars. What are your thoughts on the real risks and rewards of data sharing throughout the reefer supply chain?
I think it's a necessity that we do learn or develop a way to share data, especially when you are seeing all these alliances coming up and going away, and then new alliances are shaping up. I think that it's very important that we try to standardize a way for sharing data between different entities in the whole supply chain. And also in terms of, we have in the old days, you had the shipping lines had their own containers, their own terminals, their own vessels. That's not how the world is today. We're sharing vessels, we're sharing containers, they're sharing everything. So there is a need for data sharing, no matter whether we like it or not. And as long as there's a standardization and there's a clear rules and guidelines for that, I don't see that as an issue.
Okay. Philip, how do you reconcile the apparent contradiction between declining growth rates in traditional reefer trades and the projected expansion in specialized segments?
Well, as we saw, the reefer trade is growing. Okay, But obviously, there is some areas which are growing faster than others. Certain exotics, for example, let's say the berry trade. Good example has been Peru over the last couple of years, aided by technology, for example. So whilst we have certain areas which are, let's say, stagnant, mature markets, we have others that are growing. And a lot of those that are growing are, in fact, thanks to technology that has been enabled by the reefer container. And I think, and that ties a little bit also with the green aspect, which is quite complex, because if you look at it, a small shipper in Africa, South America, you name it, has very little control, if any, about how his car was at the end going to move to the final destination, with what type of container. Let's not forget that we have very, very few container machinery manufacturers. It's a handful, less than a handful. So the influence that I can try and be as green as possible and push for whatever, but the reality is not in my hands. It's in the hands of those 4 technological companies, which in turn have to sell their product to a handful of shipping lines. It's a very complex scenario, and therefore the ability and the willingness of those major players, and because between the shipper, a small producer in, I said Africa, it could be South America, it doesn't matter, and they have a shipping line to contend. The shipping line has leasing companies, manufacturers, box manufacturers. The chain is pretty long and very complex. So this is sort of a full seminar of a day will not fill this interesting aspect of our business, I must say.
Thank you. Well, the technology reference you make neatly segues with the next question I have in mind, which is for Lars. Beyond the significant progress in telematics and smart reefer monitoring, why, to your mind, Lars, are shipping lines not moving faster to deploy low GWP or natural refrigerants in their reefer fleets, especially when Scope 3 and refrigerant leakage will soon face greater scrutiny under EU and global regulations?
That's I did work for a shipping line one time, actually for 38 years, but that's a difficult question for me to answer on behalf of the shipping lines, why they're not moving faster. I sincerely believe they should move faster. Our role in that aspect will, of course, to continue to support measuring CO2 emissions and anything else we can measure to improve it on things. But why they're not moving faster, I will honestly have to leave that up to the shipping lines to answer that. That's not really something that we as a telematic company are involved in. But we, of course, encourage them to move faster, but that has to come from them.
Let me come to Ferenc with the next question. Ferenc, how do you assess the trade-offs between automation and labor flexibility in the design and operation of reefer terminals?
Ooh, good question. Well, I think these all depend on what we want to achieve. But if we think about purely operational performance, right? I mean, fair to say that you want to have as much automation as possible, but at the same time with the flexibility to sort out issues, because issues are something very very usual, I would say, in this business, and you certainly need someone on the ground to sort it out. So there's probably a fine balance, but of course, we have various labor laws in different countries and all that, so you also have to take that into account. But yes, I would say you probably want something long term, which is highly automated, but at the same time can handle tricky situations, because the schedule reliability of ships is not great all of a sudden. There is congestion and all sorts of things going on.
Just staying with you, Ferenc, because it came out of your presentation, 2 questions for your kind account. How relevant is the Red Sea crisis for reefer trades? Would most carriers returning to the area decreased the demand for reefer containers by much? That's the first question. And the second one for your account, others welcome to comment, of course, is I believe you said you can forecast trade volumes with higher level of uncertainty, but how about freight rates? Is that even possible?
All right. So on the Red Sea, tricky situation. What we see right now is that at least the large carriers, they are not particularly keen to really return to the region, which has obvious safety reasons, but frankly, having this kind of status quo maintained is obviously leads to higher utilization levels because, you know, longer trips. But anyways, if there is a rerouting via the Suez, that will of course make certain trade lanes shorter again. So anything I would say between Europe and the Middle East, Europe, Asia, you know, that could see some, you know, just I would say easing really, and hence a bit of a decrease in you know, demand for actual reefer boxes as well. But when you look at the overall trade, this is still a sort of small percentage of it. So overall, we would not really expect a kind of huge oversupply all of a sudden in the market. Now, when it can cause some issues, or I would say disturbance, is really what's gonna happen with the standard dry boxes in such a situation, right? When let's say there is a sudden rerouting, or even if there's a gradual rerouting, and maybe there are just frankly too many you know, dry boxes sitting around in various terminals across the globe, and those sort of or that kind of clogging issue can actually cause issues with the reefer boxes as well. On the other points on forecasting freight rates, that's something we do, or frankly try to do. Now, obviously, we do not really look at them in the sort of 5-year time horizon, because really uncertainty going forward that much would be just really high. Because obviously, as I mentioned, there is quite a bit of uncertainty with regard to forecasting actual demand, but also, you know, how carriers will have their ships, you know, basically on different trade routes. That's another thing, you know, that's particularly difficult to see. And beyond the I would say fundamental supply demand driver, you know, the carriers have, you know, very specific and particular business strategies with regard to reefer. So supply demand is also not always, you know, I would say, or not like a very perfect driver of freight rates for reefer boxes. So it's really difficult. I would say with some certainty, we can do it, you know, for like current quarter, maybe next quarter, just really looking at what's going on right now, and maybe out to a year ahead. But anything beyond that, I would say is it's just not really possible.
Okay, thank you, Lars. Back to you. How do you quantify the return on investment impact of telematic data optimization versus traditional manual pre-trip inspections across different vessel classes and trade routes?
Very good question. It's pretty simple to quantify the return on investment on the pre-tripping. Some call it green PGIs, some call it EPGIs. But the fact of the matter is that it's extremely easy to put numbers on when it comes to that. It of course depends on whether you're doing a pre-trip in the US, or you're doing a pre-trip in Singapore, or you're doing one in Cape Town. So you cannot have like a global average ROI on converting traditional PGIs into smart PGIs, EPGIs, or green PGIs. But the saving, the probably 80-90% of the savings and the ROI on converting these traditional PGIs into smart PGIs is almost only on the electricity part, because the labor part you're using on when you do a smart PGI versus a traditional PGI is more or less the same. It's very close. You save a few minutes in terms of labor, so you can quantify that by saving the electricity cost on a smart PGI. You don't have to plug in the reefer in the container yard to do a 3-4 hour PGI when you have the smart PGI system, and you can reduce up to 70% of traditional PGIs. You can't reduce; you can convert it into smart PGIs. So that particular item is fairly simple to quantify.
Thank you. We've had a very interesting cross-panel question coming in. I'd like Philip to get the ball rolling with it, but it would be nice to hear from all of you on it. It's fairly long, but let me give it to you. Given that Orbcomm's data indicates telematics companies must transition from simply selling hardware to offering optimization consulting, Drury forecasts project slower growth in traditional reefer trades, and ports are making significant investments in smart infrastructure. Are we seeing the rise of a new cold chain paradigm where data and analytics becomes more valuable than physical assets? And how can we justify investing billions in physical infrastructure when the primary value creation appears to be shifting towards algorithmic optimization and better utilization of existing capacity? So a nice meaty question there. Philip, we'd value your take, but it'd be nice to hear from the other two as well.
Yes, it's a good one. But let's not forget a very important aspect. We can have all the data in the world, but a box needs to be physically moved by a machine, by a terminal, picked up from the truck, plugged in manually, etc., etc. So we can have all the data in the world, but there is still the physical aspect of moving cargo, operational, old-fashioned, be on the ball, move it, make sure that it's on board the vessel. Everything can be nicely programmed with AI and all that jazz, but we do need people, decision makers. Simple. Are we going to cut and run? Are we going to leave 100 reefers behind, which will mean 1 extra week of the cargo sitting there? Perishables. Forget about frozen. So I think that that we need investments, physical investments, and human investments also that can take the right decisions based on the information that you can get from all your telematics.
Thank you. Before we come to Ferenc, perhaps Lars, anything you would wish to add?
I think it's not that black and white in my opinion. They go hand in hand. Yes, you'll still need somebody to drive the truck. You'll still need some human involvement, but you are able to optimize and automate a lot of the operation on both terminals on board vessels and cut down on your labor cost and improve safety because you don't have people running around in the container yards, etc. So I think it's not as simple as it's put in this question. And again, in my opinion, the shipping lines are not using the data they now have available from our devices or other companies' devices to the extent possible. They can use them a lot better to do things a lot smarter. Does that mean you have to lay off a lot of people? No, that doesn't necessarily mean that. It means that you just work smarter, you cut down your cost, you turn the equipment faster, you have better control with your cargo condition, etc. So I think the shipping line should welcome this initiative that we as Orbcom have taken now to actually go out and sit down with the shipping lines and tell them, have you thought about this? How are you going to use the data? Can you use the data for this? And this is what you should be doing. So I think they should welcome that, and yeah, they go hand in hand, like I say.
Thank you. Ferenc, do come in, please.
Yes. So even if we, say that what we have in our current forecast, it's actually going to happen. We will have these kind of average 2% growth year on year in the next 5 years. To serve that demand plus whatever's going on with dry boxes and all that, which is actually fairly similar, I think, in our current forecast. You need to spend those billions, right? You can buy software, obviously, much cheaper and have smarter systems overall. higher levels of integration and smart solutions. But as Philip said, it's just a lot of physical stuff, involved in this. So for that, it's very expensive. And especially when you think about doing these things in this, decarbonization or green energy transition, that bit makes it much more expensive. So those billions will need to be spent, even if this fairly, let's call it like a low growth environment.
Thank you very much indeed. Gentlemen, time and tide wait for no one. We're at that point where I need you to start gathering your thoughts in anticipation of me coming to you for your key conclusions and takeaways. While the gentlemen gather their thoughts, and I appreciate there are a number of questions we haven't yet addressed, so it could be they choose perhaps a couple each from the list that they wish to address. I return to you, ladies and gentlemen in the audience, with some concluding poll questions for your kind account. We're going to move at speed. What proportion of the standard dry boxes operated by ocean carriers will be outfitted with some telematic device by 2035? A third, two-thirds, or in fact the entire fleet? Your choice, ladies and gents. Let's hear from you. Very quick off the blocks, I can tell you that all three categories have attracted your votes. As I speak, and the results are flying in, the third most popular one is in fact 100%. Second is a third, but most of you are advocating for two-thirds. Here's another one for your kind account. Let's get going. It reads as follows. What are the biggest challenges? I'm going to rephrase that. What is the single biggest challenge faced by reefer container operators today? So ladies and gents, I'm looking for the single biggest challenge you perceive being faced by reefer container operators today. Lots of options there, from port congestion, sustainability requirements, cybersecurity, geopolitical crises, lack of skilled workers, cargo security, supply chain visibility, tariffs, or economic deceleration. They are all challenges, no doubt. I'm after what you see as the single biggest challenge. And in a few seconds, I'll let you know what the top three are. So as the votes come flying in third place is supply chain visibility. Second is port congestion, but it is in fact now neck and neck with sustainability requirements. We've got time for one more poll question, and then we will return to our panel. The final poll question will read as follows. Let's all take part. As a reefer shipper, BCO, are you willing to pay a premium on top of the freight rate for location and condition monitoring of your cargo if that premium is more than $50 per trip? Well, once again, very, very quick out of the blocks, and I can tell you that both options have attracted your votes. Do keep voting. After this poll question, we will come back to our panel, who will be sharing their key conclusions and takeaways, which is likely to include perhaps a reflection or two also on one or two of these very interesting poll results. So as I speak, the most popular result has polled twice as many votes as the second most popular result. Just keep voting, and I will tell you if there's been any change. I can tell you that it's remained constant. So the most popular response is yes, polling twice as many votes as the no option. Well, let us return to our panel. Here they are. Philip, you were kind enough to get the ball rolling at the start of proceedings. So when it comes to key conclusions and takeaways, the floor is yours.
Look, for me, it's quite simple. We see growth. There is plenty challenges, as we already know. There's enough challenges already. So, and I'm talking more towards shippers who at the end hold the cargo. I would say demand strongly what is required by, let's say, your shipping line. Make a list of stuff and hammer on it, because it's your cargo which is being carried. It's your year's worth of work, and a lot of work and families are behind this. Let's not forget about the aspect reefer business. There's farming behind it. There is gigantic industries where many families, and therefore the success in the logistics makes or break the business, literally. So demand over and above what could even be reasonable from your service suppliers, from the shipping lines, so that message comes through for your own benefit, because nobody's going to come and save you. You will have to save yourself, and therefore push to get what you need.
Thank you very much indeed. Ferenc, the floor is yours.
Yes, just one thing I've seen in one of the questions, which hasn't been raised, and I'm thinking that actually somehow overlaps with what Philip said. And it's actually ask what specific factors determine the success or failure of new port cold storage investment projects in emerging markets. And I think actually, obviously, that this is a huge topic, but it really, when you think about this, I would say the core point, right, is connectivity. So it's connectivity with local infrastructure, being roads, railroads, whatever, actual physical infrastructure, but the local markets as well. So, and because of the sensitivity of the commodities involved and all that, it just really requires one of the highest levels of cooperation in the wider container shipping industry, right? And I would also say that I know it's very tricky. This data sharing also came up. It's a tricky thing, right? You don't want to have any conflict of interest. You don't want to tell too much about your specific business strategies and whatnot. But I can definitely see the importance of that, at least up to a certain level, to be reached going forward for the industry.
Thank you very much indeed. Lars, the floor is yours.
Yeah, I mean, cooperation was a key word here. I think it's pretty clear that I think we all want the same thing, but we require a lot more cooperation and communication between the different stakeholders. So one know what the other one is doing, and we find a way to actually support each other, rather than finding solutions just for part of the supply chain. So we need better communication. We need to spend more time from the cinematic company's point of view. We need to spend a lot more time with the shipping lines to learn what they're looking for and to help them. So communication, cooperation, and then also, as I mentioned earlier, some kind of standardization, because we are now seeing all these, we are seeing alliances and alliance changes, etc. And then the last thing, and I'm repeating myself here, is I think we need to be much more precise in terms of how to optimize things, how to reduce costs, how to do things better for the customers of the shipping lines. I still hear a lot of fluffy words, and I use them myself. We need to be a lot more, put a lot more tangible targets on the table, and then roll them out jointly, all of us. It's time to take them from fancy words into action, in my opinion.
Thank you very much indeed. Well, I think what is beyond doubt is that all three of you have been active participants in this particular webinar, and you've certainly shared some very powerful insights when it comes to trade disruption, demand shifts, and the role of technology in the reefer container market. So the hugest of thanks to Lars, to Philip, and Ferenc. Ladies and gentlemen, as you know, with Riviera, there is always more to come. I'm going to take to share with you what's on the agenda. So coming up in the not too distant future, we have our Container Shipping and Port Technology Webinar Week. Please scan the QR code for more details on that and other webinar weeks planned. Now, this is an especially valuable resource, ladies and gentlemen. It is our virtual webinar library, and it is here that we will be housing today's materials and recording, and it is here you can watch our recent and not so recent webinars on demand and in your own time. To access this treasure trove, it's really quite simple. All you need to do is register. You can do that by clicking on the blue bar in the top right-hand corner of any Riviera page, or going to rivieramm.com/registration. As a registrant, you will receive information that matters to you, including weekly newsletters, magazines, curated content online that match your interest, and of course, early notice of relevant events such as this. The only action needed on your part is to register. Ladies and gentlemen, we know that CSR is important to you and it is certainly important to us. And I'm delighted to share with you news of a very popular initiative we are running to that end. It is our Mealtimes with My Maritime Friends recipe book. If you've not obtained a copy, you still have time. Please scan on the QR code and you too can obtain a copy. Well, that is us at time, ladies and gentlemen. I have popped in the chat a link to a feedback form. I would encourage each of you right now, this very instant, to click on it. It's actually at the top of the chat. Click on that form and let us know how you found today's proceedings. I'd like to again underscore the huge appreciation we have for Lars, Philip, and Ferenc for their comments and insights today. And I'd like to triple underline the huge appreciation we have for our premier partner, Orbcom, for generously sponsoring today's proceedings. Ladies and gentlemen, again, thank you very much indeed for joining us today. And wherever you happen to be in the world, please stay safe and well. And until we next convene, good morning, good afternoon, good evening, and for now, goodbye.